everyone, welcome back to Question Vault, your ultimate destination for Ignou exam preparation. In this video, we're diving deep into the repeated questions of Bcoe 142, Management Accounting. If you're preparing for your exams, this video will help you understand what topics to focus on and how to write smart, concise answers that fetch full marks. So, let's get started with the most repeated and important concepts that appear again and again in Bcoe 142. Before we begin, here's a little gift for you. You can download the complete free PDF of Bcoe 142 repeated questions. The link is right in the description below. But here's the twist. To open that PDF, you'll need a password, and that password is hidden somewhere in this video. So make sure you watch till the end and note it down carefully. The first and most commonly asked question: what is management accounting? Management accounting is all about using accounting data to help managers make decisions. It involves identifying, analyzing, and interpreting financial information for planning, controlling, and decision-making. In simple words, it turns accounting numbers into useful business insights. Next, the objectives of management accounting, another repeated area. It helps in planning by forecasting sales and preparing budgets. It aids control through variance analysis, comparing actual performance with standards. It supports decision-making by providing relevant data for pricing, investment, and production. It also helps evaluate performance using ratios and ensures the optimum use of resources like men, materials, and money. Remember, planning, control, decision-making, evaluation, communication, and motivation. These 6 keywords are your answer frame. Another repeated favorite: differentiate between cost control and cost reduction. Cost control means keeping costs within set limits. It's preventive in nature. Cost reduction, on the other hand, focuses on lowering existing costs without affecting quality. It's proactive. Example time. In a factory, cost control ensures monthly expenses don't exceed the budget, while cost reduction finds ways to cut power costs or optimize materials. Both are equally important. Cost control maintains discipline, and cost reduction boosts profitability. Another repeated topic is activity-based costing, or simply ABC. This question almost always appears in some form, either as a theory or numerical. Definition: ABC assigns overheads based on the actual activities that drive costs, rather than just volume measures like labor hours. Key difference from traditional costing: traditional costing uses one base for all overheads, like machine hours. ABC uses multiple activities, like setups, inspections, or machine runs, making it more accurate. Advantages: accurate product costing, better decision-making, and improved cost control. Limitations: complex, time-consuming, and expensive to implement. In the numerical type, remember the 2 steps. Calculate the activity rate equals cost divided total driver units. Allocate to each product based on its usage. This topic is a must-revise before exams. Next, let's look at budgeting, another high-weightage and repeated concept. A budget is a financial plan prepared for a specific period. Questions often ask for its process, advantages, or the difference between fixed and flexible budgets. A fixed budget is prepared for one activity level. It doesn't change even if production changes. A flexible budget, however, adjusts automatically with activity levels, 70%, 80%, or 90% capacity, for example. If the question says prepare a flexible budget, remember, classify costs into fixed, variable, and semi-variable. Calculate new costs at each level. Present neatly in a table. Also, note performance budgeting. It links money spent to actual results achieved. Always include that it improves accountability and resource utilization. Another repeatedly asked numerical area is standard costing and variance analysis. Standard costing sets expected costs and compares them with actual costs to find differences called variances. Material cost variance, labor variance, and overhead variance are the main types. A common exam question: calculate material price and usage variance. So remember these formulas. MPV equals standard price minus actual price times actual quantity. MUV equals standard quantity minus actual quantity. So standard price, if you get an adverse variance, it means actual cost is higher. Favorable means cost saving. Always end your answer with one line of interpretation, like material cost variance is adverse, indicating higher cost than expected. That one line often earns bonus marks. Coming up next, ratio analysis and cost volume profit (CVP) analysis. These topics appear almost every term in numerical sections. Ratio analysis helps assess liquidity, profitability, and solvency. Focus on formulas like current ratio equals current assets over current liabilities. Quick ratio equals CA minus inventory prepaid over CL. Gross profit ratio equals GP over sales. Practice these with examples for quick recall. CVP analysis deals with break-even point, the level where total revenue equals total cost. Formula: BEP units equals fixed cost divided by seller price over variable cost. Always show you're working clearly. Contribution per unit, BEP in units, and DEP in rupees. Exam tip: if selling price decreases, DEP increases. Don't forget to mention that. Another frequent numerical: marginal costing versus absorption costing and make or buy decisions. Marginal costing considers only variable costs. Fixed costs are period costs. Absorption costing includes both fixed and variable in product cost. In make or buy questions, calculate total profit and return on capital employed for both options and recommend the higher one. Remember, marginal costing focuses on contribution and decision making. Finally, responsibility accounting, a recurring short note topic. It assigns costs and revenues to individual managers or departments. Each manager is responsible for controllable costs, not for those beyond their control. Use examples like a production manager controlling labor cost, but not corporate tax. Add that it improves accountability, motivation, and performance evaluation. And that's it, the most repeated and scoring questions from Bcoe 142. Management accounting. Revise these concepts, practice one numerical per topic, and you're all set to score high. If you found this helpful, don't forget to like, share, and subscribe to Question Vault for more repeated question videos and Ignou updates.